welcome to our Meet the Investors panel. Today I have Nick Daley, Brian Scholten, and Kae Huynh. I'm going to go ahead and let them introduce themselves. Why don't we start with Nick?
Awesome. Thank you very much, Laura. I really appreciate you taking the time today, and thanks for inviting us. So on my side, I'm an associate at Plug and Play Ventures. We are a global innovation platform that essentially centers around supporting about 400 corporates across a different range of industries. Anything from FinTech and InsurTech all the way to sustainability, food, agriculture, etc. Essentially helping them find startups to work with and collaborate with. So primarily focus on kind of B2B startups across that space. And also what we're doing is investing essentially in our favorites. So we use that platform to gain, a kind of closed feedback loop within our due diligence process, those of which we're able to help and we think are the most exciting and we're getting the best kind of peer feedback from. We look to invest really anywhere between kind of pre-seed to Series A. I'd say typically in this kind of late seed category, usually companies with a bit of a product already formed and maybe a semblance of product market fit. Really excited to be here and happy to explain more about Plug and Play throughout the panel.
Thank you. Brian, do you want to introduce yourself?
Thanks, Laura, and thank you, Nick. Hello, everybody. My name is Brian Scholten. I spent the majority of my career in public markets before pivoting into private markets. I went to Venture University, part of VU Venture Partners. It's an industry agnostic venture capital firm. I was part of cohort 9 on the FinTech team. Our cohort made up of about 35 people, sourced and met with over 4,000 companies over a semester, a 3-month period. Where we met with startups, spoke to founders about their companies, sifted through, figured out which companies we wanted to eventually invest in, do more due diligence on, and eventually ended up taking them to an investment committee and ended up finally investing in 5 companies at the end of the cohort. It was a wonderful experience. Venture University funnels in deal flow into VU Venture Partners, which is a syndicate fund, and they recently just closed a $100 million fund too. And as I said, it's industry agnostic, mostly focusing on FinTech, healthcare, enterprise, space technology, and anything else that looks interesting.
Nice. All right, Kae.
Okay, awesome. Hi, everyone. I'm Kae. I'm a angel investor here in Silicon Valley, actively sourcing and investing into specifically enterprise software startups. I operate my own entity. It's called Enterprise Guy Ventures Limited. And yeah, that's my intro. Not as long, but yeah.
This is a really good sample of kind of the investors that I get to meet with every day. It ranges everything from angels to really big VCs. And I think it's great for the companies to see just kind of how wide a range of investors are out there. So I have a few questions, but it's a very free-flowing conversation. The first, I just want to kind of know how you guys feel about working with Newchip and like, what do we do that you like? Any conversations you've had with our companies or anything like that?
Personally, I find Newchip very valuable in the process. Obviously, you screen very quality companies globally. The companies I've met with so far have been very exciting, very innovative. And the fact that you are fully online gives access to startups from around the globe, and they might not be able to source capital or meet investors otherwise. So I think it's a really novel idea, and it's been very helpful for myself.
Yeah, and you've met with quite a few. I know I've sent you like probably close to 12, and they all had really great things to say. So thank you for meeting with all of them. Anyone else?
Yeah, I can say a few words from my sense. I think Brian's getting one of my points, which is I think we share a pretty similar kind of cultural and strategic perspective as Newchip does here at Plug and Play. Firstly, talent is distributed evenly across the globe. I think many US VCs primarily or only will invest in American companies, or in a lot of cases, even in the Bay. And maybe Kae has an insight on this. Will only invest in companies based in the Bay itself. Plug and Play has got to the point now where about 40% of our investments are outside of the US, mainly in kind of Asia and Europe. And it's become pretty clear in the relatively short amount of time that we've worked with Newchip that you share that kind of perspective, and have a real global outlook on things. And that brings us, meeting more diverse founders, different backgrounds, different viewpoints, and unique opportunities from there. The other thing that I think that we've shared is, equity is the most expensive cost of capital for entrepreneurs. And all too often, I think we've seen entrepreneurs give away a lot of their equity very early.
Yes.
And programs like Newchip, and we do the same at Plug and Play, that maybe don't take equity and find other ways to kind of run those programs, I think are net positive for the ecosystem as a whole.
Yeah, definitely. We totally agree that genius is, spread across the world evenly, but opportunities are not. So that's kind of what we're trying to bridge there. Kae, do you have any interactions? I know you're newer to Newchip, so
yeah, relatively new to Newchip.
Yeah.
But I, for me particularly, since I operate as like myself, my own entity, I do have a geographic focus in Silicon Valley. So I did get a list from one of the Newchip team members. I guess interesting note is they sent me, out of the list of maybe like 8 or 10, I invested in one of them already. So
you did?
Yeah. That's good to know we're running into the same type of deals.
Yeah, that was kind of my next question. How do you find the deal flow that you're sent? Because I know a lot of places will send you like, here's our list. But like at Newchip, we work really hard to curate down to what you are interested in, so that it's worth your time and worth our company's time as well.
Yeah. So the question is, how do I find my deals, or how do I deal source?
Yeah. Oh, well, yeah. You can talk about that.
So for me personally, I go direct. I understand, like, I guess I have my own thesis about startups, right? I think the really good ones, you could find them at accelerators and stuff, but then there's also like these second, third generation entrepreneurs who've gone through that phase one already. And so the really good ones, for example, I met with Okta employee number 3. If you know, Okta is a $25 billion, $27 billion corporation, and employee number 3 pioneered that product. He left to build another product that sold to HP Enterprises, and then he left to build this third product now in cybersecurity, permission access management. And so I came to realize, I mean, if you go direct, you could just find those startups because they're mostly just putting their heads down and building the code and engaging with customers. So 90% of my deal flow is probably from my own efforts. Because I'm looking for like this upper tier group that exists out there in the startup ecosystem. And you kind of have to speak that technical language to be able to engage with them, which results in a transaction ultimately. And then other else than that, 10% of the time, or the other angles, I'll look at my VC relationships or great places like Newchip and stuff. Yeah. So that's the source.
I was employee number 1 at a startup, so I totally feel that. I was kind of at the end, the people who were fundraising with us were like people I had known from the first week at the company, just meeting them at conferences. So that's awesome. We can't do conferences now, so this is where Newchip comes in super handy. Where else do y'all get deal flow from, Brian and Nick?
Generally from other accelerators as well. People will reach out on LinkedIn from around the globe looking for meetings, which is great. Obviously, if there's a vertical that I'm interested in a certain space, I will reach out to founders. If I hear of something that's interesting, I will go after it. Deal flow sharing with other venture capital firms as well. But yeah, I mean, with the combination of those, there's plenty of deals to go around and to look at.
Yeah. So when y'all get this deal flow, kind of what makes you want to invest in a company, if it fits, everything, and then what kind of are red flags maybe that companies could avoid if they knew what to do?
Yeah, great question. Maybe I can kick it off. I think, all of us would probably argue that the team are always vital in any decision-making opportunity around an investment. I think there are some kind of more obvious, and, any panel has kind of gone over the kind of traits they look for in a lot of founders, but, particularly for myself, it's, looking for a team that has a unique insight about a particular problem or growth opportunity within an industry. So, another way of thinking about it might be, what's the secret that the company is predicated on that no one else maybe knows or realizes yet? I think that's been a particularly interesting one to find, our kind of like breakthrough companies, where maybe there isn't much written about it yet. This hasn't been talked around the venture capital community. Wider than that, I think it's given that we're looking for big markets, but more kind of succinctly than that, we're looking for a problem that is large, but also has the kind of capabilities to be an urgent problem and a valuable problem as well. Because I think you need kind of elements of those three areas, and like people like Hunter Walk, for instance, have talked about this a lot. It's not just the beachhead figure of this market is 15 billion or whatever. It's much more about the dynamics behind that market. And then from a plug and play perspective, we're looking for a semblance of early product market fit. So some kind of market validation, whether that's a particular pilot with an enterprise or multiple pilots, or it might be kind of user engagement with a tool, or of course something as simple as revenue, which I think is a proxy of kind of execution ability. Back coming to that team part, like how easily and how can they execute efficiently.
Mm-hmm. And have you had problems kind of during COVID? I know some companies that you would expect to see scaling are having trouble right now. So are you changing any of that right now?
Yeah, it's a great question. It's difficult. The B2B space obviously has been tested the last few months. And I think really it depends on the industry. For instance, we've got a travel vertical here, which has suffered quite significantly. Obviously, the revenue from our corporate partners who are usually looking for these solutions have dried up a lot. And I think, as an innovation exec, coming to your board right now, asking for a few $100,000 to test out a new technology probably isn't a wise career move. Mm-hmm. So I think, a few sectors have definitely been hurt. But on the flip side, I think we're also seeing like a huge amount of interest in kind of enterprise B2B technologies, anything around the future of work, automation, I think is a much easier sell right now. And in the financial services space, I haven't seen, anything hit too much. I would overall say that there have been an increase in conversations around B2B pilots and kind of executing projects, but whether that has actually kind of converted into more pilots, I don't think so yet.
Okay.
And I'd be interested to see the other two and if they've experienced that in their portfolio company and stuff. But a lot more interactions, a lot more of our corporates happy to chat, but I haven't seen that translate into quick pilots, POCs, etc. today.
Mm-hmm. Yeah. What do you guys think about that?
Maybe initially, but most of my portfolio is all software. And very, very software, like infrastructure software. So not too much on my side. If anything, I think they were probably beneficiaries of COVID-19.
Okay. And then we can go back to the first part of that kind of.
Oh, the type of startups I look for in red flags. Yeah. So for the type of startups I look for, I think everything comes down to people, product, and market as my initial framework, and then I'll develop on top of that with like go-to-market strategy and partnership channels and all that. But I think it's always case by case for each startup. So what I look at, because at the seed stage, I'm looking at pre-seed, seed, and seed plus. Depending on where they kind of fit in that curve, it'll adjust my analysis, right? So I'll give you an example. If it's pre-seed, usually I don't look at pre-seed, but certain scenarios like network economics, like I mentioned, Okta employee number 3, that track record. Your product's not built yet, but you got a track record of fundraising from tier one VCs to selling to larger enterprises or even from a buyout. So sometimes a situation like that for a pre-seed, I have to look into and make an investment, right? Because the information is not always complete. Now, sometimes, most of the time, I'm looking for at least an MVP. So MVP valuation value is like 5 million plus or whichever. It's kind of just looking at the product and seeing how developed it is. And if there's traction, that's good. If there's a lot of customer traction, then it's C plus, which is usually where I like. And so most of the ones I like are like, maybe 300K, 500K annual recurring revenue. That's usually the sweet spot. And it would have to just fit the themes or thesis that I have about investing. So the areas of investment, as I mentioned earlier, maybe infrastructure or cloud infrastructure, productivity software, telehealth, social media, blockchain. Am I missing anything else? Yeah, those would be the spectrums.
Are these your preferred verticals because this is your background, or kind of how did you decide those were your preferred
Yeah,
places like that?
so similar to Brian, I leverage a lot of my knowledge from the public equities landscape. If you slice and dice the public equity markets into, I guess, 11 different sectors, global economy wise, you start to realize like the top performing sectors happen to be like technology and healthcare. Specifically within those two segments, it happens to be software. So I'll look at telehealth because, well, that's software and healthcare, and I think that's disruptive, and there's a lot of growth opportunity there with also the data infrastructure that's building up. But I'll also look into like social media sometimes because, well, something like a TikTok becoming 75 billion in market valuation, they've successfully deployed a recommendation engine to the rest of the world, whereas Google successfully deployed a search engine in an environment where, you know, search engine is great for explosive information, the era of explosive information, but now we're moving into this era of overloaded information because everyone has a mobile device and is able to upload content, right? Everyone can read and write. So moving forward, I also have this thesis on social media or that engine is we're going to move into the recommendation engine era, and it might be wise to look at these themes. So those are examples of like the verticals I look at and what I think is really growing based off of many different factors, even like global macro factors like government money printing, demographic curve, technological advancement, how frontier are they? And most of all, I guess the VC economics, which VCs are talking about these startups. Because I noticed like there's this, like I mentioned earlier, a higher caliber layer that I'm trying to tap into, but the only way to tap into that is to speak their language. They have their own nomenclature and all that. So it's a lot of grinding efforts, but if I, you know, I guess that's how I source. That's what I'm looking for. And red flags would be anyone that doesn't have a value system, that's dishonest. I think that's the biggest red flag usually.
Yeah, that's awesome. I totally agree because I'm super big on team. I love looking at the teams, and you can have a great product and you have a bad team, it's not going to work. So yeah, Brian.
Obviously, Nick touched on it. You know, TAM is obviously very important. Are they solving a problem? Is it a want versus a need? And as a venture investor, obviously everybody is looking for a 10x plus return. So is it potentially a 10x plus return? Is there an unfair competitive sustainable advantage? That's something we talk about often at Venture University. In addition to that, you know, can the founder articulate a roadmap to scale the company? They have a vision, they have an idea, but can they actually talk you through how they're going to get there, what the steps they're going to take? And, you know, that's pretty much it from my end.
Nice. So the next question I have, Kae, you kind of touched on it, but what verticals do y'all see growing in the next year? And then Nick, you kind of touched on it. What verticals do you see being hurt long-term, potentially if we don't get a vaccine here soon?
Yeah, I mean, from our perspective, I see kind of like two of our verticals, I think, that have the most amount of promise right now. So, you know, first and foremost, what I spoke about a little bit earlier, it's kind of enterprise and future of work. You know, with the movement to remote working, with an increased acceptance of distributed teams. So we're seeing a lot of startups come to us now who, you know, will have a team distributed over several different countries or different continents, in fact, you know, working from day one as remote. And we're seeing also, you know, companies like Shopify and others announcing they're going to go, you know, pretty much full remote or some kind of hybrid of the two. And there's going to have to be changes to people's ways of life. And of course, that impacts the way of work. So I think there's a lot that will continue to be done there. And I think, you know, COVID did highlight some weaknesses on a kind of infrastructure level that corporations are facing, right? So a lot of our, well, not a lot, but a few of our kind of corporate partners on the insurance side, for instance, weren't able to go into the office, and they had insurance claims being faxed to them. And all of a sudden they realized that they couldn't collect these faxes. So, you know, immediately coming to us and others asking for technologies and companies that can help them solve this problem as soon as possible. And I think, you know, the COVID has weeded out a few of those, but there's a lot that, you know, either due to inertia or cost hasn't been pushed to the top of the priority list. And, you know, I think will be pretty soon. The other vertical I'd probably quickly mention is sustainability. I think the last kind of 6 months or so has really highlighted, you know, especially for us in California, and I know the East Coast as well has struggled a lot recently over kind of storms, hurricanes, stuff. But
yeah.
This is an area where VCs need to do, and investment funds and entrepreneurs need to do a lot more in. And I think the tide is gradually turning here. I'm seeing more entrepreneurs focus on climate change, carbon capture, these kind of different areas. And I think, from an early stage point of view, it's, our responsibility to try and find these founders and support them and help them to commercialize, etc. So that's probably one of the verticals I'm most excited by for the next kind of 12 months or so.
Yeah, we've got some great renewable energy companies, and I'm like endlessly impressed, and I'm so thankful they're doing what they're doing. But Brian, do you have any thoughts on that?
On my end, I'm looking at, serious upheaval in tech right now. You see what's going on the news, on CNBC, they're being attacked from every angle. So I do continue to see in the tech vertical some significant changes and innovation, especially within deep tech, AI and data, and companies surrounding that space. I also think robotics is a very interesting space to keep looking into. And also healthcare, it's an ever evolving vertical. And I think there's just huge room for disruption on a global basis in that space. So I'm keeping an eye out for those three verticals.
Yeah.
So I guess I kind of gave my verticals earlier, but I guess I could give my horizontal. My horizontal is software. Yeah, software and everything, but primarily the verticals I mentioned earlier.
Okay. So what would y'all say to a company that maybe is kind of hitting a wall here in COVID, and now they need to pivot if they want to stay alive? Have you come across something like that, or maybe even invested in like a company that is almost irrelevant now because of COVID?
Honestly, we've been pretty lucky. I haven't seen any major drop-offs in our portfolio, and of course the first kind of month or two were all around getting companies into shape to realize this could be an extended period of time, and they need runway. And of course, unfortunately, some companies, not just in our portfolio but others, had to downsize or change structurally how their kind of companies are operating, which of course often sad and has a human kind of cost to it as well. But more broadly, looking at it, I think the most important thing is just listen to the market. I think it's really easy to say, and a lot of founders do have an amazing quality of being, very mission driven, very product driven, and wanting to excel in their area. And I think that it's really, really hard to balance that with also, in this case, to survive is to have money, essentially by the end. So either you need to be an expert at raising money or an expert of really capital efficiency. And it's now a time where you have to work on your capital efficiency, but also listen to that market, understand where your product should be going. And, I've seen some amazing success stories of, companies, for instance, pivoting. There's one I'm aware of in the UK, for instance, who they were offering kind of remote charging stations for your phone. So you could go into like a bar, you could like pay, $1, $2, get a charging station for 30 minutes, and then there'd be loads of other locations you could drop it in. They replaced that with remote hand sanitizer stations. Nice. So they are now, because they already had the infrastructure in the bars and restaurants, they basically swapped out the electronic chargers for sanitizer. Now automatically doing that. They're doing it for transport for London, for instance, the whole tube system in the UK, and had been an amazing success that way. So that's one that I've seen, and I think it's all about listening to the market, having the humility to react, and it's a test of capital efficiency as well as speed of execution.
Yeah, I agree with Nick. I think capital efficiency is kind of the word or the phrase there. Adjusting your runway, kind of being as economical as possible with whatever cash flow you do have, and adjusting from there. And something that we talk about all the time at Venture University, do the founders have grit? And in times like this is where you have to show that grit. And if it's causing you to pivot on your idea of what the company was and where it has to go to make it successful, well, now is the time to show that grit. So I think that's an important word to focus on for these companies.
We always used to say fail fast when I was at the startup I worked at. So we did fail a lot, but at least we failed fast.
Yeah, for me, I can't speak much on the question. None of my startups had to significantly pivot yet.
Yeah, because software, not probably too much pivoting going on. I guess from here, I kind of just want to know what y'all are looking at. I know you were talking about company or verticals you're excited about, but in the new year, just kind of, is your investment strategy going to change at all? Or what are y'all looking at going forward?
I mean, just keep building up the business, keep building up the reputation, keep on building up my capacity to support my startups and founders, as well as my venture partners, you could say. So just keep on networking, keep on learning about technology, and keep on meeting new people that could also fundraise.
In my short venture career, I've been more of a generalist. As I said, I was part of the FinTech team, but I want to kind of sharpen my lens and focus more on 2 to 3 verticals where I can become kind of more of an expert in that in those spaces, understand the full landscape and all the companies within those verticals, and go from there. But I'm excited for the new year and what it brings, and I'm excited to meet plenty of new amazing founders that are building fantastic companies around the world.
Yeah, okay. I wanted to add one more. So to jump into that layer, I should call it unicorn land, right there. That it just most streams won't capture, and you have to just penetrate that specific group, if it makes sense. It's a esoteric group, in other words.
Easier said than done. I love it.
Yeah, seriously, easier said than done.
Yeah, on my side, similar to what Brian was saying, I've been looking to kind of specialize in a few different verticals, and what we've kind of narrowed it down to a little bit on my team is kind of smart health and money. So more broadly, that's kind of health tech, FinTech, as well as InsurTech. Insurance in particular, I think, is a super interesting industry, and I think COVID has brought to light the role of insurance within people's lives. And taking it really, a lot of people hate insurance, and rightfully so in many cases. The model is in many ways broken. But at its very essence, it's about the wider community supporting individuals at their time of need. And I think that there's an element where we can come back to that pure mission. And I think there's so many opportunities. I think it's also a little bit behind FinTech, which is maturing really quite nicely now in its kind of second or third wave. And from an early stage perspective, I think insurance is still really interesting. Beyond that, as I mentioned earlier, anything within kind of climate change, I think we would love to take a look at, and also maybe looking at the impact of what Kae was saying around, with more kind of software and AI-enabled software kind of coming into the enterprise, what are the second and third order effects of that? I think there's going to be a lot of tools around using AI responsibly, ethically, and fairly. And we're already starting to see, stories creeping up, whether it's, the Apple Card when they launched, being accused of sexism. Amazon's AI-enabled HR tools were found to be misogynistic in many ways. I think there's a huge kind of problem area there. I don't know how that's going to play out, but I think there's potentially some interesting plays, whether that's like auditing AI models, insuring those models, going back to the insurance space, and essentially managing those within enterprises better than they're currently managed, which is kind of in this black box mentality.
Nice. Great points, Nick.
Appreciate it.
I guess so. My final question here would just be if y'all have any advice for our companies when they go into investor meetings, or anything that can kind of help them in their fundraising efforts.
Just to harp back to my time at Venture University, one basic way we put things when we wouldn't say this, but this is kind of what you're thinking. Come into the meeting, speak clearly, let us know, what do you do? Why do I care? How do you make money? And how big can you grow? Basically a keep it simple way to do things, and build around that. But that's kind of what venture investors are looking for. Just I'll leave it at that.
Yeah, I've noticed in a lot of meetings when I am with companies helping them meet investors, you don't have to hit every single point of your company because the investor will ask. So I've noticed it's a little bit better to maybe keep it not high level, but not into the weeds, and let the investor ask if they need to know more.
Yes.
I think my response on that, when startups meeting with investors, my style is the ones that could build the best relationships with me, regardless if I fund them or not. And
Yeah.
if we become tight, like we're going to help each other out. Again, regardless if I invest or not. So because we'll look for synergies together anyways. And I think as long as the person has like a strong value system, is a good person, and understands how this game works, that's good enough for me.
Yeah, and so many investors, maybe you might not be a great fit for this investor, but their friend is really interested in your vertical.
Exactly.
You know, it's so much about it is networking and just being friendly. So.
Yeah. So I guess to add to your point, if you meet with an investor originally for fundraising, but you end up don't getting the fundraising, get the friendship at least. That's the best part. Yeah.
I think the way of doing that, right, is to keep in contact, like regularly send updates. Like I love it when startups add me to their like bi-monthly or quarterly update. You know, the problem with VC is that you see so many companies, and it's so easy to put one to the back of your mind or maybe not follow up. And I think it's always about kind of staying top of mind and literally top of inbox in some cases. Super useful. I think more broadly than that as well, you know, people in VC are often very kind of vision led and want to be sold on this dream. And as Brian was saying, you know, we're looking for that 10x. So if you can sell people on the vision, not just the current like status quo and product, as well as, you know, a tip I think is always create a little bit of FOMO. We are people at the end of the day. We're not perfect investors by any means. And one thing that I think always works is creating a little bit of FOMO, but obviously without testing that value system that Kae was mentioning, without being dishonest, without that, you know, create that emphasis that you're building a great company. There are, you know, tailwinds behind what you are doing, and, you know, make us want to be a part of it. I think that's a good way of doing it.
And here's the other part. Okay, I've come across this situation too, because right now the dynamics of the conversation, it sounds like the startups are coming to us and pitching to us, right?
Yeah.
Wait until you as an investor find a really good startup and they push back and they ask you like, what's your worth? And I'm like,
horrible.
Oh my God. Like, you know, they're good, but they'll push back on you. So remember, an investor is also a hustler, a salesperson, just as much as a startup, right? And when we find, you know, when we do that esoteric networking and find that niche group, we get pushed back all the time.
Right.
And you should challenge your investor.
Yeah.
Who you're about to get in bed with, essentially, right? And I think it comes across like there's coming back to the FOMO aspect to an extent. If you're being chased as an investor, it might be like kind of less appealing than someone who's kind of like being a little bit offhandish, wanting to know what you're going to bring to the table before they're desperate for your money. Because nowadays, I think capital is becoming pretty commoditized. You know, there are amazing tools like Clearbank, Pipe, others who provide, you know, software businesses with financing without giving away equity. And coming back to my first point, I think my first question, equity is the most expensive thing a founder has. Like, you got to be fighting to keep as much of that as you can, and make sure that investors not just bringing money to the table, brings other things, and will be that person who's going to support you through the whole potentially 10 years, 12 years of the investment.
Such a two-way street here. And I think everyone watching this demo day can see that our companies and their pitches really do create a lot of FOMO because they're all great. So any final words from you guys?
I think for mine, just would love to thank, you know, yourself, Laura, and the rest of the Newchip team. It's been a relatively new kind of relationship for us, but so far it's been great, and looking forward to this, to watch this event in full, and hopefully looking forward to connecting with any of the startups. Feel free to reach out to me on LinkedIn or email, and I'm looking forward to connecting with a few of you.
Yeah, just want to say thank you so much for giving me the opportunity to get on stage, get some stage time. If anyone, any investors that want to connect, or any startups that want to connect and just talk strategy, you could Google search #enterprise guy or enterpriseguy.com. That's where you can find me.
Yeah, thank you very much, Laura, for inviting me, and nice to meet you all. And of course, reach out to me, and I would love to speak to any founders or startups that are doing interesting things. Love to share my network with you if I can't help in funding, but this has been a great experience, and I'm very humbled by it. I appreciate it, Laura.
Yeah, thank you all so much, and everyone enjoy the rest of Demo Day.